In this video, we'll be preparing the Selling and Administrative Expenses budget. We've actually completed many of the master budgets in our previous videos. The sales budget, production budget, direct material budget, direct labor budget, manufacturing overhead budget, ending finished goods inventory budget, and then the cost of goods sold budget. What we have to do now is complete one of the final budgets that we need to produce the income statement, which is the Selling and Administrative Expenses budget. What is a Selling and Admin Expenses budget? This budget is also often called an operating expense budget. It outlines the planned expenditures for non-manufacturing activities, such as research and development, design, marketing and advertising, distribution, shipping expense, and customer service costs. All of these costs are non-manufacturing period costs, which are expensed on the income statement as they are incurred. Similar to the manufacturing overhead budget, these costs must be broken down into variable and fixed components. The variable expenses vary with the number of units sold, never the number of units produced. For instance, sales commissions are dependent on the number of units sold. Commissions are paid to motivate the sales personnel to generate sales. Fixed costs are, they're fixed, at least within the relevant range. We're continuing our example of Gratman Manufacturing to demonstrate the preparation of the Selling and Admin Expenses budget. Gratman Manufacturing expects variable selling and admin expenses to fluctuate with the number of units sold based on the following rates per unit. Commissions $6, shipping $1.75, and other $1.25. Gratman also recognizes that some monthly selling and admin expenses are fixed. Salaries $17,000, depreciation $14,500, and other $11,000. Prepare a selling and admin expenses budget for the first 3 months and the first quarter. Note again that the cost driver for the variable selling and admin expenses is always based on the number of units sold. No other cost driver is used because these costs vary with the sales activity only. Step 1 is to start to prepare the selling and admin expenses budget using a chart. As always, we start with the title, Gratman Manufacturing, name of the budget, Selling and Administrative Expenses budget, and the date, quarter ended March 31st. We're then going to move on and add the necessary columns. Since we're completing the budget for the months and the quarter, we have 1 column for the description, 3 columns for the months, and 1 column for the quarter, for a total of 5 columns. The headings are description, January, February, and March, and finally the total column, which here is called first quarter. Because the variable expenses vary with the level of sales, we start row 1 of the budget with expected unit sales, which we get from the first row of the sales budget. January 8,000 units, February 9,000 units, March 9,500 units, and first quarter 26,500 units. We now transfer this into the first row of the Selling and Admin Expenses budget. This is what we will use as a basis to calculate the total variable expenses. Step 2 is to determine the total variable expenses. The formula, expected unit sales from the sales budget, multiplied by the variable expense per unit sold, which equals the total variable expenses. Note that we have to perform this calculation for each variable expense. In order to determine the different variable expenses, we have to return to the question. Here we see that variable expenses are the commission paid to sales personnel, $6 per unit sold. Shipping, $1.75 per unit sold, and other variable expenses, $1.25 per unit sold. We now have each of the variable expenses, so we can use this information for step 3. Calculate the total variable expenses for each variable selling and admin expense. We already have the first row, which is the expected unit sales from the sales budget. The second row is the title, variable expenses, and then 1 row for each of the variable expenses, starting with commissions, $6 per unit sold, shipping, $1.75 per unit sold, and other, $1.25 per unit sold. The last row, total variable expenses. We're now ready to do our calculations. We're going to apply our formula from step 2. Expected unit sales multiplied by the variable expense per unit sold is equal to the total variable expense. So, for January, 8,000 units sold multiplied by $6 per unit commissions is equal to $48,000. 8,000 units sold multiplied by $1.75 per unit shipping expense, $14,000. 8,000 units sold multiplied by $1.25 per unit other variable expenses, $10,000. For a total variable expense in January of $72,000. Moving on to February, 9,000 units sold multiplied by $6 per unit commissions equal to $54,000. 9,000 units sold multiplied by $1.75 per unit shipping expense is equal to $15,750. 9,000 units sold multiplied by $1.25 per unit other variable expenses, $11,250. For February, total variable expenses is $81,000. Finally, March, 9,500 units sold multiplied by $6 per unit commissions is equal to $57,000. 9,500 units sold multiplied by $1.75 per unit shipping expense, $16,625. 9,500 units sold multiplied by $1.25 per unit other variable expenses, $11,875. For total variable expenses for March, $85,500. We now calculate the total for the first quarter. We can do that by multiplying the first quarter units by each variable expense, or simply add each of the rows for January, February, and March, which is what I'm going to do. For commissions, $48,000 plus $54,000 plus $57,000 is equal to $159,000. For shipping, $14,000 plus $15,750 plus $16,625 is equal to $46,375. And other variable expenses, $10,000 plus $11,250 plus $11,875 is equal to $33,125. And for the total variable expenses, $72,000 plus $81,000 plus $85,500 is equal to $238,500. We now have all of the variable expenses, so we can move on to Step 4. Add the fixed selling and admin expenses into the selling and administrative expense budget. First, we go back to the question to find the monthly fixed expenses. We can see that they are salaries of $17,000, depreciation of $14,500, and other fixed expenses of $11,000. Now that we have all the fixed expense information, we can get to adding the fixed selling and administrative expenses to the budget. Because we have limited space, I've created the fixed expenses portion separately. We'll add it to the variable expenses on the budget later on. First, we'll add all the descriptions to each of the rows, starting with the heading Fixed Expenses. Then, each of the individual fixed expenses, salaries, depreciation, and other fixed expenses. Then a subtotal, total fixed expenses. We then use the information from the question to populate all of the fixed expenses, starting with salaries of $17,000, which will be identical for January, February, and March, with the first quarter equal to $17,000 plus $17,000 plus $17,000, which is equal to $51,000. Next is depreciation, $14,500 for each of the months. Add them together, $43,500 for the first quarter. And finally, the other fixed expenses, $11,000 for January, February, and March. Summation, $33,000 for the first quarter. Total fixed expenses is the sum of each of the columns. Note that the columns total for every month will be the same. In this case, $17,000 plus $14,500 plus $11,000 is equal to $42,500 for January. But note that it's identical for February and March because fixed expenses don't change. Not within the relevant range, at least. The total for the quarter can be calculated in two ways, either as a summation of all of the totals in the columns, $42,500 plus $42,500 plus $42,500 is equal to $127,500. Or we can take the total of the first quarter column, $51,000 plus $43,500 plus $33,000 is equal to the same total, $127,500. That's it for the fixed expenses for the selling and admin expenses budget. We can now add this information to the variable expenses in order to complete the selling and admin expenses budget. But note that there's one row left, right at the bottom. That's in order to add the total variable expenses and the total fixed expenses in order to determine the total selling and administrative expenses. For January, $72,000 plus $42,500 is equal to $114,500. For February, $81,000 plus $42,500 is equal to $123,500. For March, $85,500 plus $42,500 is equal to $128,000. And for the first quarter, $238,500 plus $127,500 is equal to $366,000. That's it. We've now completed the selling and admin expenses budget for Gratman Manufacturing. In our next video, we're going to use the information from this and other budgets to prepare the budgeted income statement. As always, thanks so much for watching.